Most people enter the world of trading looking for a financial escape, a way to claim freedom from the 9-to-5 grind. But as Mark Douglas illustrates in his masterwork, Trading in the Zone, the market is not a place where you find freedom. It is a place where your lack of internal structure is exposed. Before we dive into this chapter-by-chapter breakdown, please consider hitting the like button and subscribing if you find this helpful. It helps the algorithm share these with others who might also need this. Today, we are dismantling the psychological gap, the distance between what you know about the charts and what you actually see on your bottom line. Let's begin our descent into the zone. Chapter 1. The Evolution of the Hunter. Chapter 1 takes us back to the dawn of analysis. In the beginning, there was fundamental analysis. It was a logical world. If supply goes down and demand goes up, price must rise. It's elegant, mathematical, and almost entirely useless for the modern trader. Why? Because models don't move markets, people do. A fundamental model doesn't account for the irrational fear of a hedge fund manager or the euphoric greed of 1,000 retail traders. Then the world shifted to technical analysis. This was a leap in evolution. It recognized that humans are creatures of habit. We form patterns. We create support and resistance with our collective psychology. Technical analysis allowed us to get into the mind of the market. It closed the reality gap between what should happen and what is happening. But here's the twist. Even with the best technical tools, most traders still lose. Douglas identifies the psychological gap, the agonizing moment when you see the setup, you know the pattern, but you can't pull the trigger. Or you do pull it, and the moment the price ticks against you, you panic. Chapter 1 teaches us that the road to success isn't paved with better data, it's paved with mental analysis. The best traders don't work harder, they think differently. Why is trading so psychologically taxing? In Chapter 2, Douglas explains the lure and the danger. Trading is one of the few places on Earth with unlimited freedom. No boss, no clock, no rules. It sounds like a dream, but for the human psyche, it is a nightmare. Since the day you were born, you have lived in a social structure. Families, schools, and jobs provide boundaries. We are conditioned to obey external rules. But the market has no rules. It doesn't care if you lose your house or your dignity. Without an internal mental structure, the freedom of trading becomes a license to self-harm. Most traders are addicted to random rewards. They make a lucky trade, and their brain treats it like a hit of a drug. They start to believe they're geniuses until the market reality checks them into oblivion. To survive, you must learn to create your own boundaries in a world that offers none. We move to Chapter 3, Taking Responsibility. This is the threshold where the boys become men and the amateurs become professionals. It sounds simple, doesn't it? I take responsibility for my trades. But Douglas argues that almost no one actually does. If you blame the market for taking your stop, you aren't taking responsibility. If you blame a news event or a manipulated price action, you are handing your power to an external force. To be a consistent winner, you must realize that you, and only you, are responsible for your results. Consistency is not a feature of the market, it is a feature of your mind. You must sculpt a new version of yourself, a version that doesn't feel like a victim of the ticker. When you truly take responsibility, the market stops being an enemy you are trying to beat and becomes a stream of information you are simply observing. Chapter 5. The Carefree State of the Zone. Chapter 5 introduces us to the zone. Think of the elite athlete, the basketball player who can't miss, the sprinter who feels no effort. They are in a carefree state of mind. They're not thinking about the consequences. They're just doing. In trading, the zone is where fear is gone, not because you're reckless, but because you have accepted the risk. Most traders say they accept risk, but they don't. If you feel a knot in your stomach when the price moves against you, you haven't accepted the risk. When you are in the flow, you don't try to make money. You make yourself available to the market.
You let the market give you what it has rather than trying to force what you want. The zone is a state of total synchronicity between your mind and the collective consciousness of the market. Chapter 5. The Mirror of Perception. Why do we see threats where there are only patterns? Chapter 5 dives into the dynamics of perception. Douglas tells the story of the boy and the dog. A boy bitten by a dog as a child will see every dog as a monster, even if it's a friendly puppy. His mind associates the dog with pain. Your brain does the same with trading. If your last 3 trades were losers, your brain sees the next setup not as an opportunity, but as a threat. It creates a perceptual blindness. You won't even see the signal to enter because your mind is trying to protect you from the pain of losing again. To master this, you must deactivate your association mechanism. You must learn that the market's information is neutral. It is not happy or sad. It is just price and volume. You must learn to see the now moment as completely independent of the past. Chapter 6 brings us to the core secret of the professional, the uncertainty principle. Most traders think that if they learn enough, they will know what happens next. Douglas says this is a lie. You never know what happens next. It only takes one trader somewhere in the world to place a massive order and destroy your perfect technical setup. Professionals don't try to be right. They try to be objective. They accept that anything can happen. Once you truly believe that you don't need to know what's next to make money, the pressure disappears. You stop projecting your truth onto the market and start listening to the market's truth. Now we get to the mechanics of success in Chapter 7, Thinking in Probabilities. Think of a casino. Does the owner of the casino sweat when a gambler wins $1,000 at the blackjack table? No, because the casino is thinking on the macro level. They know that over 1,000 hands, their edge ensures they will be profitable. The individual hand, the micro level, is irrelevant. As a trader, your edge is just a higher probability of one thing happening over another. That's it. You must learn to separate the outcome of a single trade from the outcome of a series of trades. When you view trading as a numbers game, a loss isn't a failure. It's just the cost of doing business. Chapters 8 through 10 deal with the hidden software of your mind, beliefs. Beliefs are structured energy that shape how we see the world. You can't just delete a belief you've had for 20 years. You have to deactivate it by drawing the energy out and putting it into a new belief. Douglas identifies the 5 fundamental truths you must install in your mind. 1. Anything can happen. 2. You don't need to know what's going to happen next to make money. 3. There is a random distribution between wins and losses for any given edge. 4. An edge is only an indication of a higher probability of one thing happening over another. And 5. Every moment in the market is unique. If you don't believe these, you will fall into self-sabotage. You'll hit a glass ceiling where you lose money because deep down you don't believe you deserve to be wealthy. You must align your identity with your goals. We conclude with Chapter 11, Thinking Like a Trader. Douglas doesn't just give you theory, he gives you a ritual, the 20-trade exercise. Choose an edge, any edge, then execute 20 trades without a single deviation. No hesitating, no skipping, no trying to be smart. This exercise is a head-on collision between your old self and your new self. It is the final step in proving to your subconscious that you can trade with discipline. Trading is like walking a bridge over the Grand Canyon. When you start, the bridge is wide and safe. But as the stakes grow, the bridge becomes a thin wire. Consistency isn't about the wire, it's about the internal balance you maintain while you walk it. You are now equipped with the map. The market is waiting. The question is, do you have the courage to stop looking at the screen and start looking at yourself? Welcome to the Feather Signals.